Over the past couple decades, the mutual fund industry has continued to create new products. I mean, let's face it, there are 26,000 mutual funds in my database, and the reason there are 26,000, there's a lot of duplication in various asset classes, but there are also these, I hesitate to call them, but a gimmick fund. And some of them are things like funds that are targeted at people of one particular faith, and these funds will invest in accordance with that particular religion or branch of religion. There are funds that are socially responsible funds that will, not invest in companies that pollute. They look for companies who are, are good to minorities, whatever the case may be. Now, those are all worthy causes, whether it be religious, whether it be particular social causes. But here's the thing that an investor needs to know, and that is whenever you buy a fund that restricts what the manager can buy, you have to be willing to accept lesser returns in exchange for the things that are important to you. Because if there's a stock, let's say that just for the sake of this discussion, you had a stock and it came out in the newspaper, this is going to be the greatest stock ever for the next 10 years guaranteed, but it didn't fit within what that particular socially responsible fund could buy, they can't buy it, even if they know it's going to be the greatest stock ever in the history of the world. Now, that doesn't mean you will get lower returns, because some of these managers have done a good job even with the restrictions. It just means you have to be willing to accept lower returns. Now, I'm never going to be a guy who tells you, look, you shouldn't invest with what you believe is important. I can't tell you that. You have to decide how much it's worth to you to make those investments. But I do want you to know that when you do that, just be prepared for the possibility of lower returns than what you could get otherwise.